Hello, traders. It's 8:02 a.m. Chicago time on April 27th, 2023. It is Thursday, GDP day. This is episode number 2457. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at how the market's set up this morning, on our Convergent Trading pre-market summary sheet. Again, you can always grab this at twitter.com/conv trading, CONV trading. I recommend that you follow so you can get it as it's published, hot off the presses, ink still wet, all that stuff. What we have today is a mild risk-on sentiment. NASDAQ's popping higher. Meta reported yesterday. Meta really crushed earnings. They beat by about 8%, came in at $2.20 versus $2.03. They have done billions of dollars of fat cutting, cost cutting, and have prevailed and come out on top here. Revenue was expected at $27.62 billion, came out at $28.645 billion, beat by 3.71. There were many others after the close yesterday, but I won't go through all of them. But the theme for earnings currently is to just cut. Lose employees, lose non-revenue generating departments or non-profit contributing departments and things like that. Kind of just cutting the fat across the board. That's the major theme. U.S. GDP came out about a half hour ago. It was expected, this is Q on Q, was expected at 2%. This is the Q on Q advanced for Q1. Was expected at 2%, came in at 1.1%. The indices sold off a little bit. Man, this guy just doesn't stop talking. Came in at 1.1%. Initial claims came in pretty strong, 230,000 versus 248,000 expected. GDP price index came in at 4%, which is kind of hot. The price component was kind of hot for Q1, 4% versus 3.7%. But against the prior, there was expected to be a relief in this price index, but it upticked from the prior, which is 3.9. And then PCE prices came in at 4.2% versus 0.5, which is really hot. So overall, just looking kind of heavy on that release. The U.S. House of Representatives just basically pasted together a debt ceiling bill. And it's not likely there were many adjustments made to get it through the House, just the House. It's not likely to get passed by the Senate. And President Biden has already said that the Republican bill has just no chance of becoming law. In other words, he wasn't going to sign it. So that's still a risk overhang for us as we reach the deadline. U.S.-China relations are in a very risky period, what Dalio's saying, Ray Dalio. And then Barclays beats profit expectations on U.S. credit card boom. We're looking at pending home sales at 10 o'clock. We're looking at the nat gas numbers at 10:30, and so on and so on and so forth. Bank of Japan interest rate decision. Is that right? Bank of Japan interest rate decision today. I thought that passed already. Oh, yeah, it's there. Bank of Japan interest rate decision, expecting it to hold at negative 0.1%, very accommodative. The S&P is in a multi-distribution profile. Really, the ES has been rallying on a kind of a choppy basis overnight. 188,000 contracts traded so far, pretty decent volume. 100% of the inventory is long. It popped higher on earnings yesterday. Oh, by the way, after the close today, we get Amazon, T-Mobile, and Intel reporting Intel's pretty big mover, and it kind of sets the tone for the microchip sector, semiconductor sector. Back to the ES. The ES is 100% long this morning on 188,000 contracts, 25 points of range. That's about what we got yesterday. The point of control notice is down at below 40.95, and we've been kind of flirting around with the 4100 here, just toying with it. The overnight session went up to 4105.75. It splashed up a little bit. It had already put in a high before the release, and it just kind of splashed up a little bit and actually provided an opportunity for a short from 4103.25 this morning all the way back down to 88 before the bounce, but or 89, which is where the VWAP mid is. We'll cover that in a minute, but look at what we did. We broke down in an initiative way a couple days ago. So we opened at the high, retested, and we finished at the close. And remember yesterday I was saying this is an impulse day down. We expect that low to be taken during the session at 40.92. And then yesterday it opened, it pulled back. And if you recall, I talked a lot about very likely resistance in that 41.15.16 area. Couldn't even get to there before selling off yesterday and ended up pushing the lows. So yesterday really stocking for shorts. Here's what I had talked about yesterday. I was looking for to either, the thing is, while we're doing this, it actually started climbing up before the trader bite was over. It started to climb up into the open, and then as soon as we opened, it sold off. So the picture was a little bit different to what I show here, but I expected resistance right here in the 41.16.15 area, and then I expected it to come down and really take out this low, and that's what it did. The next area down was this 80, and then below that was looking for 61 or so, and it didn't quite get there. Here's what actually happened. So we look at the active chart. There it is. There it is. We opened up. We ended up pushing that low, 40.80, right? And then popping back up, but not getting up into the 15.16, right? So we ended up taking the low as expected, and we ended up popping back up to the 41.10. Couldn't quite get to the 41.15.16, and then later in the afternoon, it ended up pushing the other side. So we ended up with a neutral day. We ended up with a neutral extreme day down, actually, with the market closing below the IB after breaking the IB high. It closed below the IB low. Settlements at 40.76. And then since then, with the splash up right after the close, we've been holding above. We've been holding above the prior settlement. So we have an internal gap to settle here from where we are. At 4,100, we have an internal gap all the way down to 40.76. So we're going to keep an eye on that. That potentially creates an opportunity. Yesterday, we did not have value. If you look at this profile, there's just no value here at all. Okay? And, hey, this is a guy with a Peaky Blinders hat. This is his mouth. The cigarette right here. I got to take a moment and do this. It's our tradition now. This is his nose right here. And this is his little hat. These are his eyeballs. Anyway, enough playing around. He's got a double chin. So what we're seeing this morning is it squeezed the high, then it fell off, and held the mid and VWAP for a bounce right back into the 4100, and it finally released to the downside. But what it's done is it's bounced up again. So it made for a tough hold on that GDP miss yesterday, this morning. It was very, very difficult to hang on to the short side. There was a really nice setup there this morning. But overall, the market has not given up these lower prices easily. There was some pretty heavy offers that got lifted. And then the delta is negative this morning, but price is saying that it's exhausted the sellers at this point, and it's finding buyers. So I see the high yesterday as vulnerable. So I'm looking at the 4110 area. The exact high was 4109.75 yesterday. I'm looking at this 4110, and it's looking to me like the one-time framing down. One-time framing down may be coming to an end here today. Unless we open and immediately drive lower for an internal gap to settle trade. These aren't high probability trades when we open in range like this. But unless it drops quickly, we might find ourselves grinding our way back into the 4121 area above. If you look at the bigger picture, if you remember, this is the map from yesterday. Here's that 1615 area. It almost got there. We managed to push down into this next support area. Nice little bounce there yesterday, and then it fell below it and held below it. And then this morning, we are right up against this former resistance. So we are against this 4100 that's held quite a bit. There's a threat here that this high is likely to go. And if it does, it really opens up the 4121 right up in here. More importantly, the more structured level up here is the 4135. 35 becomes the key test upwards, and we are not, it's only 35 points up from here, 36 points up from here, not too bad. So I would be very cautious about trading breakouts on the short side today. If anything, we may see a balancing day, a day where we may end up with a higher low, not a higher high, but a higher low, and then follow on tomorrow, we may end up covering and getting back into the 35. The 35 is a key area to test above. That is this band right here. This 35 is the next key area to test. Immediately we have 1516, so the price map hasn't changed all that much, except we're going to get rid of this level after today. But you know, I'm very cautious not to believe the short side breakouts today unless we close the settlement price and continue to show weakness and start pushing the low. At that point, we're looking for 61 as the next key target right down here. And then from there, it is pretty open down to the magnet. The magnet's at 24-ish, I think, 24.75. That's the key magnet price right down here if it continues lower. But more likely than not, I'm expecting it to take out the 4110 from yesterday and to start working itself back up to 4135, given the way these earnings have been playing out. So that's what's on deck for the S&P as far as I can see it, the way this market is kind of setting up. By the way, one of these inputs is that, let's clean this up. One of these inputs is that, look at how weird this profile is. It spent a lot of time up here yesterday in balance. So for a while, for quite a while, yesterday's range remained in balance with the prior session before breaking lower at the end of the day. And then we find ourselves in balance here. To me, this is a market that's giving us a sign that it's having a hard time facilitating trade to the downside. When it facilitates trade to the downside, it's very, very progressive. It doesn't take that much time to kind of push through. And what we're seeing here is it's pausing, which makes sense because this is where we've paused before. I mean, there's a lot going on down here in the 4100. You can see it in the composite right here. And this, to me, is a risk for shorts. It's a risk for shorts, okay? Looking at the NQ pretty muted story. It ended up having a very, very clear drive and trend day down. It very clearly drove down, but yesterday, instead of continuing down and taking out that low, which is what we would expect, auction markets say the way it works is if we close at the low and time runs out, time not being that important of a factor really in trading, we finished at the low. That doesn't signify that the market has found its buyers yet. It just ran out of time. So in general, what it does is if it closes on the low, especially on a trend day down like we had 2 days ago, we would expect the market to continue to explore those lower prices to find those buyers, because that's its job. Let me find the buyers and then figure out what price is equilibrium for the maximum number of participants to trade. That's why we use volume profile for that. And what it did yesterday is we had an inside day in the NASDAQ. It's showing strength. Another reason why I'm expecting the ES to roll up, because the NASDAQ already has. The NASDAQ has good cause to do that. It had Google the day before, Microsoft. It had Meta yesterday. And it's the market's liking what it hears in terms of cost cutting, personnel, decreases and layoffs and things like that. Stockholders like that stuff because it's more money in their pocket. But the NASDAQ looks to me like it is ready to start pushing higher. Here's the map for the NASDAQ. So the NQ, and I drew this yesterday, by the way. If we move forward to the NASDAQ. So if you look at the NASDAQ, what I drew yesterday is it's very, very likely to squeeze up into this 95 area before making its next move. This is what the NASDAQ actually did. You could see that it opened, it tried to return to where the auction ended the day before, could not, and it pushed right into that area above that I had talked about, that 95 area that I talked about. And from there, it sold off and settled a little bit lower. But again, this is a show of strength in the NASDAQ. The crude, on the other hand, crude, what a beauty this is. Crude has tested and taken out all of the support. These levels have been here a while. Has taken out all of the support and has closed the gap. Remember, I talked about this gap. Once we get to 77, and if we hold the 77 area, this gap is as good as gone. Is as good as gone, and it just exploded through yesterday, down almost exactly to our next stock zone, our next predefined area. So only to settle at the 74, whatever it was, 32 or something like that. The crude is doing exactly what was expected. Roll out of balance higher, break back into balance, and once it breaks to the downside, it'll be very difficult to contain the selling in crude, and it's all the way back to where it was from before when OPEC announced that 600,000 barrel cut. So OPEC's got to be sitting there figuring out what their next move is here. But it's holding on to these low prices. If you see here, it's holding on to these low prices, and it's very, very likely to continue lower from here. The next level down is 72.50 as discussed yesterday. So that's the whole picture. That's the truth, the whole truth, nothing but the truth. I'll leave you with that. Again, the S&P, going to be cautious with the short breakouts. unless it takes out the settlement price and starts making a run for that low from yesterday, which is not likely. Otherwise, I'm looking for this to either run through to 41.15, take out the 41.10, run through the 41.15.16, and then from there, walk itself back to 35, okay? So it's not about, it's not really about, hey, you know, you're talking about it going up and it going down. Yeah, because I don't have a time machine. I don't know what it's going to do. But the idea behind the stock zones and these price maps, as I've mentioned many times, is we can't tell the market what to do. We don't know what the market will do. I think a lot of people think they know what the market will do before it does it. That's just confirmation bias. But the key is, okay, if it breaks here, what's the next key test area that it's likely to go to? And that's what these price maps are for. And if we can define that, then we can see, okay, it broke. Let me lean on something to take advantage of the next test because the market's already testified that it's got strength. For example, if it breaks the 41.10 this morning. So this is how I've traded for the last, 15 out of 23 years of trading. And I have not changed it the entire time. From going from being a high volume scalper to trading structure, this has been the approach, and it doesn't matter what kind of market it is, bull run, correction in 2008, it doesn't matter. It's the same kind of thing. And I don't have to adjust moving average, look back periods or indicators or anything like that. I just look at the auction for what it is and understand that the market just is simply testing one price level or zone to another in an effort to seek equilibrium in the market, because that's when the maximum number of participants get the trade. Good luck.